Many professional and individual investors will try to beat the market, but research shows that 87.42% of actively managed funds underperformed the S&P 500. So on this channel, I talk extensively about investing in ETFs or exchange traded funds because I believe that is one of the best ways that you can invest. And I also understand that it is very, very difficult to beat the market. I personally prefer to have a large proportion of my investment portfolio invested in ETFs. So I have an investment or stocks and shares ISA and also a self-invested personal pension, and the majority of my investments are in ETFs. However, in today's video, I thought I would mix things up a little bit, and I have invested £250 into 25 different stocks, and then we'll see for real whether this stock portfolio can beat its benchmark. To be honest, I don't think it will, but I thought this was an interesting idea for entertainment purposes. So yesterday I invested £250 into the stock market across 25 different stocks. However, I think it's really important to note that I have set stop losses for each and every one of these different stocks. I have set this stop loss at 20%, so the maximum amount of money that I can lose with these investments is £50. This is very much a speculative portfolio. It is not very diverse. Obviously, there's only 25 stocks in there. You are not getting anywhere near the diversity that you would get through investing in an ETF like a FTSE All-World, where you're getting over 3,000 different stocks. And in terms of region, this is not a diverse portfolio. 80% of these stocks are US stocks, and the remaining 20% come from the Netherlands, Denmark, and Germany. I'm certainly by no means suggesting that you go out and copy this portfolio. This is merely for entertainment purposes and just to see how this portfolio compares to investing in an ETF. So I use Trading 212 for the stocks portfolio. I use Trading 212 because they offer commission-free investing. So I was only buying £10 fractional shares of each and every one of these 25 different stocks. So that meant that I was doing a lot of buying different shares. And if I'd used a traditional platform, I might have been charged, say, for example, between £6 and £9 to invest in each and every one of these stocks, which simply wouldn't have made it worth it. So that is why I'm using Trading 212. If you want to check out commission-free investing with Trading 212, then I'll pop a link down below where if you use that link, you will get a free share if you start investing. And as always, please remember that capital is at risk. This is not financial advice. I'm just sharing the stocks that I have added to this investment portfolio. What I will say is I'm not going to go into a lot of detail as to why I invested in each and every different stock, because otherwise this video will go on for a very, very long time. But I can always do a future video with more information. So the first stock is Amphenol, the second stock is Arista Networks, the third stock is ASML, then Axon Enterprise, Broadcom, CrowdStrike, DaVita, Deckers Outdoor, Dick's Sporting Goods, Duolingo, Eli Lilly & Co, Fair Isaac, Fidelity National Information, Hartford Financial Services, Iron Mountain, Marriott International, Micron Technology, Novo Nordisk, NXP Semiconductors, Progressive, Qualcomm, Quanta Services, Seagate Technology, Supermicro Computer, and Talanx. So you'll see that the portfolio is pretty evenly distributed with around £10 put into each and every different stock. Now, in all honesty, I don't think that this portfolio is going to beat the market. So I'll be using Vanguard's VWRP, which is the accumulating version of the FTSE All-World, to compare the performance over time of this stock portfolio to that FTSE All-World ETF. Now, as I said, most professional fund managers fail to beat their benchmark over time. So I gave you the stats for the S&P 500, but it is the same across the board. So when we're looking at Europe as well, 92.31% of funds underperformed the S&P Europe 350. Also, the beauty of investing in ETFs is that it is a very simple and easy investment to make. Now, I spent around about an hour doing the research for these different stocks and shares, which I by no means think is enough time to go into the great detail that you need to if you think that you're going to pick investments that are going to beat the market. However, interestingly, in the best-selling book, A Random Walk Down Wall Street, they say that a blindfolded monkey throwing darts at a newspaper's financial pages could select a portfolio, could do just as well as one carefully selected by experts. And actually, there was a study that was done that proved that that was the case. So maybe I will do all right. If you'd like to subscribe to this channel, it'd be great, because I'm thinking about doing an update on the performance of those ETFs versus the performance of this 25 stock portfolio in around a month's time or 6 weeks time potentially. Let me know in the comments down below if you would like to see this. Now, what I will say is that, as always, I think investing over a long time period is always very, very important. So I do plan to keep hold of these individual stocks for 5 years or more. And I probably do think that in the end, the ETFs will win out. The only way that these stocks will end up getting sold is if they do drop by over 20% and those stop losses are activated, and then they'll be sold that way. So let me know in the comments down below, are you holding any of these individual stocks and shares, or do you stick mainly to investing in ETFs? And let me know whether you think that this portfolio will end up beating the FTSE All-World. I am not so sure. Thanks so much for watching and have a lovely day. Bye bye.